All right, all right, all right, all right, all right. Kulipa ushuru ni kujitegemea. Ladies and gentlemen, now is the time you are waiting for. As you all know that this is the time for tax returns, and I have looked for an expert who can guide us on the same, and I have gone all the way to Alabama. We have the CEO, Bwana Samuel Kamau, who is going to guide us and teach us and tell us more about taxes. And it's my pleasure now, without much ado, to introduce our guest. Today we are not going to know about his profile. We are going to know his profile next time. But today we want to be taught more about taxes, tax returns. Maybe you are there, you have never done your returns, it's your first time, you don't know where to go, you don't know who to guide you. With us, we have CEO Samuel Njuguna. And I want to bring on board the CEO to introduce himself to us. Remember, this is Pacific Waves Television coming live from Seattle, Washington. My name's Alkeri Prestige. Let me bring to us CEO to say hi to us and also to introduce himself. Welcome, CEO, and say hi to our viewers and listeners.
Thank you very much, Alkeri Prestige, for having me today on Pacific Waves Television. And as you have already mentioned, my name's Samuel Njuguna, and I am happy to be here to have a chance to say a little more about taxes during this tax season. Again, thank you very much for hosting me today, and I want to say hi to every person who is tuning in to listen to what we have to share today. Thank you.
Bwana Samuel, who are these called Sams Financial and Taxes? Please introduce to us, present to us, who are they?
Allow me to say a little more. First of all, myself, Samuel Njuguna, I am an accounting and tax professional, and I also work as a finance director of a non-profit organization here in the US. In addition, I work part-time for an organization called Intuit. Intuit is a tech company that offers in the market products like QuickBooks, TurboTax, ProConnect, Online Tax, among others. And as you have already mentioned, I'm also CEO of Sams Financials and Taxes. And Sams Financials and Taxes is an organization that offers services to the listeners, those who are tuning in today, and we specialize in four main things. The first thing we do is bookkeeping. When we are talking about bookkeeping, is organizing your financial transactions, and we organize your financial data into manageable groups. We organize them for you, and we organize them into what is called ledgers. In addition, we also do accounting. This is where you do more than just bookkeeping, and you are also able to produce summary reports of all the financial data an organization has. And normally, the products of accounting are such things as a profit and loss statement, a balance sheet, a cash flow statement, among other statements that are required in a business. The number 3 service that we have is QuickBooks training. This is where we help business people who are using the QuickBooks software. For those of you who know, QuickBooks software is an accounting software, and we enhance people's skills in the usage of this software. And we also do this with a goal to helping our people to gain access to the accounting and tax profession here in the US. When you get here to the US, you realize most of the people do things that they have been guided by other people on how to do or on how to enter a certain industry. For example, if you look at many of our people, you see them in nursing because many people who came before are in the nursing profession, and so they will guide others to join that profession, or even trucking and so on. And I also feel a call to be able to help people here in the US, especially people from East Africa, to also be able to get into the accounting profession and into the tax profession. And so I offer this QuickBooks training with that in mind. I want to help people to be able to get a way to join these two professions. And number D, the other thing that we do is tax preparation and filing. And tax preparation and filing, here we are thinking about how to comply with the tax law. This is where at the end of the year, you need to give a return to the IRS. And the idea is comparing how much tax has been withheld by your employer, and then you compare with the actual tax liability. Of course, if you paid more, you will get a refund. If possibly you paid less, then you'll be having a deficit that you'll be required to pay.
Okay. You mentioned something, and you caught my attention. Submitting tax returns to the IRS, and now is the time to return our taxes. Who is supposed to do that? Maybe you can tell us, because I know we have some people who have started earning maybe in less than a year or maybe last year, and maybe they need to do their tax returns. Who is supposed to do that?
Thank you very much for that question. A great question there. Generally, it is not everyone who is required to file taxes, but one of the determinants is your total income for the year. The amount of income that you can earn before you are required to file taxes depends on the type of income. For example, how did you make your income? Is it from interest? Is it from wages? Is it from a business? And then your age, and in addition, your filing status. For example, if you earned money that is less than your standard deduction, you don't have to file a return. However, for people who are in self-employment, especially people who are doing small businesses, what we call the side hustles, or you are just in business, you're in self-employment, your income may be below the standard deduction, but you are still required to file because you are supposed to declare and pay what is called self-employment taxes. They normally say the threshold for self-employment income is about $400. So even if you make $400 and above, you are supposed to file a return if you are in self-employment. You also can file a return even though you may not have reached the standard deduction, or you are not above the standard deduction amount. If you made some money and some tax was withheld on your behalf and it was sent to IRS. Why so? Because if you are charged any taxes, you are supposed to get a refund for those taxes. If you do not file a return, there is no way you can get the refund. And so even though your income may be below the 13,850, which is the standard deduction for a single person, in the year 2023, you still will need to file taxes so that you can get a refund from the IRS. There is also the issue, for example, of the Social Security benefits. In most cases, if the only income you make is Social Security benefits, you don't have to file a return. However, there is a way they put it on a scale to see exactly how much the Social Security benefits you have together with other income is, and you may be required to pay a tax for a portion of your income if your income is high. That's how I would deal with that, Kiari Prestige. Thank you.
Okay. I have 3 listeners who are following us, and all of them have a question.
Yes.
I'll throw those questions to you, and you can answer them separately to your ability. One listener is saying that I have a non-profit organization and I never made any profit. Okay, I have a non-profit organization. Do I need to do tax return? Another one is asking, I have a LLC organization, company, and I never made any profit. Do I need to do tax return? And another one is asking, maybe I can read the question. In case I qualify to do my tax returns and I fail to do them, are there consequences? Those are the 3 questions from our listeners.
Okay, so if you are a non-profit, if you have a 501c3 status, you are not by law required to file returns as an organization. However, you are supposed to do other returns that are normally done by non-profits. For example, there is the Form 990, which every non-profit normally files allowed once every year. Of course, it has other limitations and exactly what is required for you to file and the information that you are supposed to submit. And my advice would be that you talk to a tax consultant who can help you on exactly how to do that, or you talk to a CPA who can help you on exactly how to deal with that situation. And you may be a non-profit, but you're also supposed to do other returns, what we call the informational returns. For example, the salaries that you pay people, you are supposed to give those informational returns in terms of W-2s at the end of the year. In addition, there is what we call the 941s, which are the quarterly returns. You are also expected to do all those. If you are an LLC, as long as you made more than 400 in income, you are supposed to file a return, because an LLC most likely will be seen as what we call self-employment. And so, yes, you are supposed to file a return, not unless what you made is less than $400. What was the other question? Can you remind me? I think there is one that I haven't dealt with yet.
Okay, consequences of not doing tax returns, and maybe you are required to do it.
You see, doing tax returns is the law. However, the law is gracious. You are normally given up to 3 years to do your returns if you are claiming a refund or you are due for a refund. However, if you owe in taxes and you don't file taxes, and possibly you had a tax liability, yes, there are consequences, because you are supposed to pay those taxes with penalties. And if you have not filed a tax, we say there are no limitations as to when the government can come to you and request those documents and that you pay the tax. So there are likely consequences, and so the best thing is to file a tax return, whether you made very little. It doesn't matter what you think about it, but you need to go ahead and comply with the tax law.
Okay, the listener goes ahead and asking, is it felony not to return taxes?
I am not a lawyer, I'm not an attorney. So in terms of defining what crime it is or what part of the law you broke, that may be best handled by an attorney. So I may not be able to enter into all that or even deal with that. But I know that the law requires that each person who lives here in the US files taxes.
Okay, what's the deadline of doing tax returns every year?
It is normally somewhere in the mid-April for individual tax returns. Of course, there are other deadlines for other organizations. But for now, let me talk about the individual tax returns. It is supposed to be by 15th of April this year, for example, but sometimes it varies. It will go to 18th, depending on the date and when or where the date lies.
Okay, another question. What are statutes and how many statutes exists?
I believe here you're talking about the statuses of filing taxes. And when we talk about statuses, these are classifications of taxpayers that has been developed by the IRS. Everyone takes the status of who they were at the end of the year for which they are filing. And we have 5 main statuses, not in any specific order, but the first one is head of household. Who uses head of house status? These are people who are unmarried, who pay at least half the cost of housing and support for other people who are living within their households. Number 2 is what we call married filing separately. This is normally used by married high earners, people who think their spouses may be hiding income, or people whose spouses have tax liabilities issues. That is married filing separately. It is one of the most punitive of the statuses to use. It is not advisable to use that one, but unless you must, and as you can see, you are a very high earner, or possibly you have issues with your spouse, and for that reason you want to file separate. Number 3 is what we call married filing jointly. This is the one that is used by most married couples, and this is normally the best, and you get the highest deductions, including the highest earned income tax credit when you use the married filing jointly status. Number 4 is what we call the qualified widow or widower, and this is normally used by people who lost a spouse recently or are supporting a child at home. So if you lost your spouse, you will be allowed for the last year that you lived with your spouse to use the same status of married filing jointly. But then the 2 years that will follow, you are supposed to use the qualified widower and use that status for 2 years. After that, then you can file as head of household. Then the last one is single. The single status, this is the one that is used by unmarried people who do not qualify for any other filing status. I hope that answers your question, Bwana Prestige.
Okay, for number 2, married filing separate, why did you call it punitive?
It is punitive because if you use this status there are many credits that you will not be allowed to take. In fact, almost all the credits, you get what we call the standard deduction, and you get the standard deduction of a single person, one, and then all the other credits, and income tax credit, the education credits, you can be able to take all those among others.
Okay. Somebody was asking that. What are tax deductions and why are they important?
Now, to be able to arrive at the income that the IRS uses to compute the tax liability or the tax that you owe, they look at all the monies you made, and then to arrive at the amount that they will use to tax you, there are some amounts that they allow to be removed from your income. That is what we call deductions. And sometimes it is used generally in taxation, just the way we use the term expenses in accounting. So deductions could also be another word for expenses, but now when we are speaking in terms of taxes. However, if I can give a short definition, deductions reduce your income to determine how much of your income is taxable. In other words, we call this the AGI. To be able to get to AGI, which is the adjusted gross income, you remove the deductions. Let me say a little more about deductions. There are normally two main types of deductions. We talk about the itemized deductions and the standard deductions. What are itemized deductions? These are several items that you can be allowed to remove from your income before you arrive at the taxable income. For example, there are several examples. For example, property taxes that may have been levied by the state, any state taxes like sales tax and so on, mortgage interest, charitable contributions, medical expenses, individual retirement arrangements, things like student loan interest, things like penalty on early withdrawal of retirement benefits. All those are itemized deductions. Then there is what we call the standard deduction. Every year, the IRS normally sets figures for the standard deductions, and they are normally adjusted for inflation every year. For example, this year, the 2023 that we are filing now, for a single or married filing separate, the standard deduction is $13,850. For a married filing joint or a qualified widower is $27,700. And for a head of household is $20,800. However, how this works, you compare the standard deduction with the itemized deductions. And whichever is higher is what you take as a deduction to reduce your income so that now you can arrive at the taxable income for the year. However, there is still other terminologies that we use for deductions. For example, we normally say if you are in business, you are allowed to deduct your income expenses that are necessary and reasonable for your kind of business. So for those of us who are doing small businesses, maybe you are in trucking, you may be having a restaurant or another little store, every expense that is necessary and reasonable for you to make your income is allowed to be removed from the income that you make. And the list is endless. If I can mention a few, if you advertise your business or market it, you can reduce your income with that. If you go for training and you take a certain training to enhance your skills as you do that business, again, you can deduct that from your income if you're in a business. If you lease equipment and so on, if you pay interest for loans, if you lease an office to be able to do your business and so on, if you're using your equipment and they are being depreciated, you can charge depreciation expenses and so on. So you are allowed to deduct all expenses that are necessary and reasonable to be able to do your kind of business.
Okay, I have a question from one of the listeners by the name
Yes.
Ann Kalaja. I don't understand the question, but I'll read as it is, so maybe
Yes.
you'll understand. She's asking, what about filing as the head of the house? Head of the question.
Possibly she may be asking about the head of household status, where you are in a family. Possibly she may be leading a family. She's not married. She has children. Yes, that is allowed in the law to do that. You file and you claim credits for the people who are living in your house as long as they lived there, for example, for 6 months for most of the people. If it's your parent, you could even claim them as dependents, even though they may not be living in your house, but they are living within the US. They could be in a home or something like that. But if you are supporting them, you can still claim them as dependents. So yes, it is possible to file as a head of household, if I understood the question right.
Okay, thank you. Okay, most of our people are involved in small businesses. What are some of the available business deductions?
Thank you very much, Kiari Prestige. I already mentioned a few of those. For example, I mentioned about the many things you can remove as expenses in business. But in addition, there is what is called the qualified business deduction that is allowed for every business. And if you are doing a small business and then you are allowing your income to flow into your personal return, what we call pass-through income. So you are doing a business on the side, but instead of filing as a separate business, you take the income that you made, you add it to your income that you made through employment, and you file together. They allow up to 20% of your qualified business income to be removed from the money you made from doing that business. So it is normally a 20% limitation. In addition, one other that many people don't do that I want to add here is what is called a home office deduction. You may be doing a small business and you run your business from home. For example, you have a small home office, you are doing a trucking business, but you have a home office. By law, we are allowed to take what we call a home office deduction, and you can calculate the area that you have dedicated to your business, the office area. And for all the utilities in the house, for example, you're talking about electricity, you're talking about the water, sewerage bills that you pay, you're talking about the gas, all the things that you're paying for the house, you're talking about the phone, the internet, and so on. You can take a percentage of those and charge them to your business. You can also take something like the home mortgage interest and charge a percentage in accordance with the surface area that you are using for your business within your home. So that is another available deduction for people who are doing business.
Okay. Our listener is saying that excellent and thank you, my guys. I'm answered. So it seems you understood the question our viewer and listener had. And when you were talking about those status, you have repeatedly mentioned credits. What are tax credits?
Now, let me explain it this way. When you talk about the deduction reduces the amount on which your tax will be computed. However, a tax credit is far much more powerful than that. It reduces your tax liability, the amount you owe IRS dollar for dollar. So, for example, if you owed $5,000 in taxes and you get a tax credit of $2,000, if you get a credit, then it will reduce that tax liability straight. You will end up owing like $3,000 instead of the $5,000. So if I can define it in a short way, a tax credit is an amount as a taxpayer you can subtract directly from the taxes you owe the government. That is what a tax credit is. Now, there are several credits that exist.
Okay, continue.
Or did you have a question?
Continue.
Okay, so there are several credits that exist. Let me mention a few. I may not be able to mention all of them. For example, there are the educational credits. One of them is called the American Opportunity Credit, or it used to be called Hope Credit before. And this is for those who are pursuing higher education from college level. And it is normally up to around $2,500. Then we have what we call the Lifetime Learning Credit for people who have finished the first 4 years of college education or post-secondary education, and they are doing master's or PhD, and is normally up to $2,000. And these credits are what we call non-refundable credits. We also have what is called the child tax credit. This is given to help with children who are under 17 years, and this year is about $2,000. And for those who are between 17 to 23 and they are full-time in college, the credit is $500. Then we have what we call the Child and Dependent Care Credit. This is given to help those with children who are below 13 years of age to get baby care or babysitters so that both parents can go to work. Normally, it is required that if you get child care, for you to be able to claim this credit, you need to give the name of the organization that gave you the care and the address and their EIN, or what we call the EIN, and that is just the equivalent of a social security number organization. However, even if it's an individual doing it, they can give their address and give their social security number, and it will be accepted, including the statement of how much you paid to the babysitter. Then we have what we call the earned income tax credit. This helps people who are earning less money, the lower income brackets. And again, is determined by your filing status and other factors. We also have what is called the savers credit. This benefits people who make eligible contributions to qualified investment retirement accounts like 401k and so on. For an individual, it's normally around $1,000. It's $1,000 for this year, and it's $2,000 for married filing jointly.
Maybe you have joined us right now. Today we are discussing taxes, and with us we have a guest from Sam's Financials and Taxes, who is the CEO, Bwana Samuel Njuguna. And before we summarize, we have like a few questions that we need to be answered by our guest. But it's good to remind you that you are listening Pacific West Television, coming live from Seattle, Washington, and we continue with our guest.
You are watching Pacific Waves Television, USA, a place of nourishment.
Okay, our guests are, as our people prepare to do their 2023 taxes. Okay, I hear some tax credits are refundable and other tax credits are non-refundable. Maybe, I don't know whether you have answered that question. Maybe the difference, what's the difference and which one is better? Have I asked you that question?
Not yet.
Okay, maybe you can, before we guide our viewers and listeners on how to do their returns this year, maybe I hear there are some tax credits are refundable and other tax credits are non-refundable. What's the difference and which one is better?
Okay, so when we talk about refundable credits, this is the most beneficial type of credit because it is normally paid in full to the taxpayer. When we think about the non-refundable tax credit, this reduces your tax liability. But when your tax liability becomes zero, the amount that remains in the credit cannot be given to you. It will not be given to you to put in your pocket. So that is an non-refundable tax credit. However, the refundable tax credit, if you have finished your tax liability, you will actually be given that money to put in your pocket. That's why refundable credits are the best. And they are the ones that are most beneficial to us as taxpayers.
Okay, as our viewers and listeners prepare to do their taxes this year, the 2023 taxes, are there any new tax credits that the viewers should be on the look out for?
Yes, there are a few new ones that have come up recently. For example, the first one I can mention here is the new clean vehicle credit. This is if you buy an electric or cell vehicle, you are entitled to about 7,500 in credits. However, it is an non-refundable credit. It can only reduce your tax liability. There is also another tax credit, and that is the energy efficient home improvement credit. And very close to that is another one called residential clean energy credit. These mainly have something to do with your home. For example, if you're using energy saving tips in your home or buying Energy Star certified products, you can get several credits. For example, if you change your roof and you use solar system to start powering your home, you can get a credit for that, but you need to get more information from a tax expert on how much that will be so that you don't invest and then you realize you can't get all the money you thought you get. You can check some of the items you purchased in 2023, things like air conditioners, if you purchased one, refrigerators, washers and dryers, if you changed the light bulbs and so on. You need to check all that and see if some of them qualify.
Okay. Our last question from our viewer. the viewer is saying, it's my first time to do tax returns because I qualified to do tax returns this year. And so what are the documents in case I reach you? Now, in case he reaches you, the CEO, Bwana Samuel Njuguna, what are the documents am I supposed to have? But he says that he has already been given his W-2. What other documents is he supposed to have when reaching to you?
All the documents, for example, you just mentioned the W-2. That is one of the important documents, a W-2. If you have a 1099 or any other document that shows any money that was paid to you, then you should submit all those documents to the person who is preparing your taxes. And when you give what you have, we always have a way of asking questions so that we can know if we need to ask for more information from you.
Okay. Now, my producer for our show tells me that we have only 1 minute remaining. I'll give you this 1 minute. Maybe you do your parting shot. And in case there is something you would like to add, I'll give you this opportunity. And also you can give us all your platforms where maybe our listener and viewer can reach you. Maybe TikTok, Facebook, Twitter, maybe phone number, messenger. So you're going to give us all your platforms where our viewers can go see more about Sam's financials and taxes. So I want to give you this great opportunity to give us your parting shot.
Thank you very much, Kelly Prestige, for giving me this opportunity to come to this show. I also want to take this opportunity to say thank you to every person who tuned in to listen to us today. And I want you to know that we are here to help you so that you can do your taxes in the right way, you can prepare your reports in the right way, and so that you can get the maximum deductions possible and be able to enjoy the credits that the government is giving to its people. So if you want to reach us, you can call us on 407-780-0943 or 205-203-3783.
I'd like you to say those numbers slowly so I can write them. You said the first number?
407-780-0943.
Okay, the other one, wait a bit.
The other number you can reach us on is 205
203
3783.
3783.
Yes.
Maybe you can check in our screen and confirm those numbers.
Yes, that's right. Those are the numbers. And you can also write an email to us. You could also, by the way, do a WhatsApp message to any of those numbers. You can also write to us an email on SAMFAND, that is
Wait a bit.
Sam,
okay, wait. Email address?
Sam F AND yes T LLC at gmail.com. That's like Prestige.
At gmail.com. Okay. So it was pressure having you, Bwana CEO Samuel Njuguna. Let me give you that seconds to say bye to our viewers and listeners. Bye.
You are watching Pacific Waves Television USA, a place of nourishment.
Would you like to optimize on your tax position? Would you like to optimize on your tax position? SAM's Financials and Taxes specializes in accounting, bookkeeping, tax advisory, and tax filing services. We handle books for gas stations and restaurants, churches and other non-profits, Airbnb and other rental businesses, tracking and rideshare businesses, content creators and care homes, among others. Contact us on 205-203-3783 or 407-780-0943 or send us an email. Sam's Financials and Taxes, enhancing your prosperity by supporting you and your business. Tax avoidance is perfectly legal. Kupunguza ushuru ni kujitegemea.
Good news. Sam's Financials and Taxes will help you so you can focus on driving the truck, keep it in its lane and drive it safely all the time. We will support you in the tax season and throughout the year by providing first-class services in mileage tracking, bookkeeping, accounting, tax advisory, informational returns, tax preparation and filing, among others. We are in the season. Let's work on your financial reports, 1099s and tax returns. We guarantee deductions and credits within the law and to help you avoid penalties. Call us right now on 407-780-0943 or 205-203-3783 or write us an email on samfandtllc@gmail.com.
You are watching Pacific Waves Television USA, a place of nourishment.
Pacific Waves TV. Nenyuge na neta. Shiaraya. Pacific. Mushewa ikeno.
Pacific Waves Radio.
Ayage makaro merera. Pacific Waves TV. Woko ne Pacific Waves TV.